Hello everyone, how are you all? I hope everyone is fine and preparing for the exam May 2022 attempt. Okay, today we are here to discuss the amendment related to CA inter examination as per accounting paper is concerned. Correct? There are some amendment in the accounting paper. Let us discuss that. So, first amendment is related to applicability of accounting standard. Now, applicability of accounting standard is divided in two parts, means applicability of accounting standard for non-corporate company and for corporate means companies. Correct? Now, previously before this amendment, for applicability, the companies were non-corporate entities were divided into three parts: level 1, level 2, level 3. But now there is one amendment, and now for applicability for non-corporate entities, the entities are divided into four parts: level 1, level 2, level 3, and level 4. I don't know whether it is important from examination point of view or not, but amendment is amendment. Any amendment is of course important from examination point of view. So now we can discuss what actually is the meaning of level 1, level 2, level 3, level 4 as per amendment is concerned. Chalega? Yes, sir. So you can see applicability of accounting standard to non-corporate entities. Now it has been divided into level 1, level 2, level 3 and level 4. Correct? Level 1 are also known as large size entities. Level 2 will be medium size entities. Level 3 will be small size entities, and now level 4 will be known as micro entities. It means now level 4, level 3 and level 2. Level 4, level 3 and level 2 will be known as micro, small and medium size entities. Micro, small and medium size entities. Micro, small and medium size entities. Previously we used to call them small and medium size entities. Correct now? Small and medium enterprise. Now wherever SME is mentioned in accounting standard, it will be replaced by micro, small and medium size entities. Correct? So wherever you will find SME, so now SME will be replaced by what? It will be replaced by MSME. Correct? Yes, sir. Now coming to the definition of level 1. So of course there is some definition, there is change in the definition also. So now level 1 entities will be those entities which will fulfill any one of the following condition, any one of the following condition at the end of relevant accounting period. So that entity will be classified as level 1 entities. First point number 1 is what? Entities whose securities whose securities are listed or are in the process of listing on any stock exchange, whether in India or outside India. So any entities whose securities are listed or in the process of listing either in India or outside India will be considered as level 1 entities. Correct? This was previously also. But can I say for non-corporate entities, this point will not be applicable because this for them the shares or debentures will not be listed. So this point is not relevant for non-corporate. Correct? Yes, sir. Point number B, any entities which are banking entities, bank or financial institution or entity carrying on insurance business. So any entities which are doing business of banking entities, or it can be financial institution or any insurance entities, means it is carrying a business of insurance. Correct? Then point number C, what they said, amendment is in point number C and point number D. So what they said, all entities whose turnover exceed rupees 250 crore, exceed rupees 250 crore in the immediately preceding accounting year. So any entities whose turnover here means excluding other income. So turnover here means when you see SOPs, the total income consists of revenue and other income. So turnover here means only revenue from operation. It will not include what other income. Understood? So turnover here whose turnover exceed rupees 250 crore in the immediately preceding accounting period. Understood? So this condition is very important. Any entities whose turnover exceed 250 crore in the immediately preceding accounting year. Then point number D, all entities having borrowing in excess of rupees 50 crore, in excess of rupees 50 crore, in excess of rupees 50 crore at any time during the immediately preceding accounting year. So this there is amendment in point number C and D. So the limit has been increased to 250 crore and 50 crore. Understood? Yes, sir. So can you repeat with me? All entities means any entities whose turnover exceed rupees 250 crore during the immediately preceding accounting year, or all entities whose borrowing means having borrowing in excess of rupees 50 crore at any time during the previous accounting period. Then point number E, holding and subsidiary entities of any one of the above. So any holding entities or subsidiary entities of any one of the above will be also level 1 entities. Correct? Yes, sir. Level 1 and 2. Let us come to level 2. Level 2, what they said? Level 2, any non-companies entities which are not level 1, which are not level 1 but fall in any one of the following categories are classified as level 2 entities. Correct? There are three conditions. Point number 1 is what? All entities whose turnover exceed rupees 5 crore, whose turnover exceed rupees 5 crore but does not exceed rupees 2 sorry whose turnover exceed 50 crore, not 5 crore, whose turnover exceed 50 crore but does not exceed rupees 250 crore in the immediately preceding accounting year. So whose turnover exceeds 50 crore but does not exceed 250 crore, because if it exceeds 250 crore then it will become level 1 entities. Correct? Yes, sir. During the immediately preceding accounting year. And all entities having borrowing in excess of rupees 10 crore but not in excess of 50 crore at any time during the immediately preceding accounting year. Understood? Yes, sir. Then point number 3, holding and subsidiaries of above entities will be also level 2 entities. Definition is very simple. Means for level 1, level 2, level 1 turnover borrowing. It is what? More than 250 crore. It is more than 50 crore. Here it is more than 50 crore. Here it is more than 10 crore. Understood? Yes, sir. Have you understood this point? Then coming to level 3 entities. So level 3 entities will be those entities which are not covered under level 1 and level 2 and which fulfill any one of the following criteria. So point number 1, all entities whose turnover exceed rupees 10 crore, whose turnover exceed rupees 10 crore but does not exceed rupees 50 crore in the immediately preceding accounting period. Correct? It means turnover here should exceed rupees 10 crore but does not exceed rupees 50 crore. And point number 3, all entities whose having borrowing in excess of rupees 2 crore. This there is a change in definition in this also. In excess of rupees 2 crore but does not exceed rupees 10 crore at any time during the preceding accounting year. Understood? Yes, sir. It means now in this case means when it's a level 3 it become 10, it become 2. Understood? So this you need to only memorize. Correct? Yes, sir. Then what is level 4? Means there is one more point. Point number 3, holding and subsidiaries of above entities will also become level 3 entities. Correct? Yes, sir. Now coming to level 4 entities, any entities which do not come under level 1, level 2, level 3 will become level 4 entities. So non-company entities which are not covered under level 1, level 2, level 3 are considered as level 4 entities. Understood? Correct? Now why we are doing this applicability? Because there are some exemption given for micro, small and medium enterprise. Micro, small and medium enterprise means level of entities all accounting standard will be applicable as it is, and no exemption and relaxation has been given to level 1 large size entities. no exemption from any accounting standard for disclosure requirement has not been given to level 1 entities. Means if you come to the applicability part, you can see level 2, level 3, level 4, some relaxation and exemption has been given, but for level 1 entities are required to comply in full all the accounting standard. Now if you come to level 2, level 3, 4, so accounting standard 1 is applicable to level 2, level 3, level 4. AS2 is also applicable, but if you come to AS3, you can see not applicable, not applicable, not applicable. So AS3 is not applicable to level 2, level 3 and level 4, correct? AS4 is applicable, AS5 is applicable, AS7 is applicable, AS9 is applicable. Coming to AS10, it is applicable to level 2, but coming to level 3 and level 4, it is applicable with disclosure exemption. There are some disclosure exemption for level 3 and level 4 as per AS10 is concerned. As per AS10 is concerned. Yes, sir. AS11 applicable, but applicable for level 2, but coming to level 3 and level 4, applicable with some disclosure exemption. You are not supposed to remember what are the disclosure exemptions, that will not come in exam, but you should just uh, try to understand for which what AS is fully applicable and what AS is applicable with some relaxation exemption, means some para is exempted or there are some disclosure exemption. Correct? Yes, sir. AS12 you can see applicable, 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 fully applicable. AS13 you can see applicable, applicable, but for level you can see for level 4 it is applicable with some disclosure exemption. AS3, correct? Yes, sir. AS14 you can see applicable, applicable, and it is not applicable for level 4. It is not applicable for level 4. Understood? Yes, sir. Coming to AS15, it is not applicable. Refer note 2C. If you want to refer note 2C, what is given? That is not required. Sure. Okay. Yes, sir. Now coming to AS15, you can see for level 2 also it is applicable with some exemption, some para is exempted, but AS15 is not in our syllabus, therefore we are not supposed to discuss what para is exempted. In this also applicable with some exemption, applicable with some exemption, with some para is exempted. AS15 is not in our syllabus. AS16 applicable, applicable, borrowing cost is applicable. AS17 segment reporting, you can see not applicable, not applicable, not applicable, fully not applicable. So AS17 is fully not applicable. Coming to AS18, it is applicable for level 2, but it is not applicable to level 3 and level 4. Fully not applicable, fully not applicable. AS19 is applicable with disclosure exemption, with disclosure exemption, with disclosure exemption. Correct? Yes, sir. AS20, you can see it is not applicable, not applicable, not applicable. It is not applicable for any entities, means any entity means level 2, level 3 and level 4. AS21, it is not applicable, not applicable, not applicable. AS22, it is applicable, but for level 4, it is applicable only for current tax related provision. Mean deferred tax is not applicable for what? Level 4 entities, for micro entities, correct? But it is applicable for what? Level 2 and level 3 also. Yes, sir. Yes, sir. AS23, it is not in our syllabus, but not applicable, not applicable, not applicable. Similarly, AS24 means discontinuing operation. You can see applicable for level 2, but not applicable, not applicable for level 3 and level 4. Correct? Yes, sir. AS25, not applicable, not applicable, not applicable. It is also not in our syllabus. AS26, intangible asset, applicable only for level 4. It is applicable with some disclosure exemption, Yes, sir. AS27, not applicable, not applicable, not applicable. AS28, you can see AS28 means impairment. It is also not in our syllabus, but applicable with certain disclosure exemption, but not applicable for level 4. Means for level 4, many exemptions are given. AS29, provision, contingent liability and contingent asset, applicable with certain disclosure exemption, Understood? Have you understood this point? So this you can go through. I don't know whether this will be important or not important from examination point of view. Sometimes they have asked in RTP MTP a question related to this. If this is non-corporate entity, whether this means what are the relaxation and exemption given. Such type of question have been given in RTP MTP, but till now it has not been asked in exam. Correct? Understood? Have you understood this? Yes, sir. Now, coming to the applicability of accounting standard to corporate entities. For corporate entities, all the companies are divided into SMC and non-SMC. So, their definition has been also changed. SMC. So, we have already done the meaning of SMC, but now in the meaning of SMC there is some changes. So, what is the meaning of SMC? SMC means small and medium-sized companies. So any company which are not SMC become non-SMC. So if you understand what is SMC, will automatically understand what are non-SMC. Correct now. So a company shall qualify as small and medium-sized company if the conditions mentioned below are satisfied as at the end of relevant accounting period. SMC means any company. They have given some negative definition whose equity or debt securities are not listed or are not in the process of listing on any stock exchange, whether in India or outside India. Means any company whose shares are not listed or not in the process listing either in Indian stock exchange or foreign stock exchange. So for that company will be SMC. Which are not banking company, which are not financial institution, which are not insurance companies. Means any company which are banking company, any company which are insurance company, any company which are financial institution, that will be non-SMC without any limit. Means even though their turnover is rupees 1, that will become non-SMC. Correct? Yes, sir. Any company whose turnover excluding other income does not exceed rupees 250 crore in the immediately preceding accounting year. Means if any company whose turnover exceed rupees 250 crore, then it become non-SMC. Similarly, any company whose turnover does whose the whose sorry which does not have borrowing in excess of rupees 50 crore at any time during the immediately preceding accounting year. Means can I say in this way, any companies which have borrowing in excess of 50 crore at any time during the previous accounting period will be non-SMC. So any company which does not have borrowing in excess of rupees 50 crore at any time during the immediately preceding accounting year. So these are two, I will say, amendment. Correct. So it now become 250 crore and become 50 crore. Understood? Then any company which is not a holding company, not a subsidiary company of not as means any company which is not a holding company or subsidiary company of a company which is not a small and medium sized company. Understood? Correct? Understood? Means can I say any holding company, any subsidiary company of non-SMC will be non-SMC. Any company which is a holding company and subsidiary company of non-SMC will be SMC. Means can I say in this way, any companies whose shares are listed in recognized stock exchange either in India or outside India will be non-SMC. Any company which are in the process of listing either in India or outside India will be non-SMC. Any banking company will be non-SMC. Any financial institution will be non-SMC. Any insurance company will be non-SMC. Any companies whose turnover exceed rupees 250 crore during the immediately preceding accounting period will be non-SMC. Any company whose borrowing which have borrowing in excess of rupees 50 crore at any time during the previous accounting period will be non-SMC. Any holding company and subsidiary company of a non-SMC will be also non-SMC. Understood? Yes, sir. Means can is a company which are not covered under SMC are considered as non-SMC. Understood? Very simple. Now coming to relaxation and exemption. So for non-SMC there is no relaxation, no exemption, but for SMC some relaxation and exemption is given. You can see following accounting standards are applicable in full: AS1, AS2, AS4, AS5, AS7, AS9, AS10, 11, 12. That is, this accounting standard are applicable in full to SMCs also. Means exemption and relaxation for SMC are given as below. But they have said AS3 and AS17 is not applicable to them in full. AS3 and AS17 is not applicable to them. However, there are certain exemption has been given. Means any accounting standard not applicable to SMC since the relevant regulation require compliance with them. Means AS 21, 23, 27 is related to consolidation. Means if such company will have subsidiary company, then only this India will then only this accounting standard will be applicable. Otherwise, this accounting standard will not be applicable. So AS21, AS23, AS27 will be applicable whenever it is required to prepare consolidated financial statement as per Companies Act. Correct now. These accounting, the following accounting standard are applicable with certain exemptions. Certain with some para will be exempted. For example, AS15 certain para will be exempted. AS19 certain para will be exempted. AS20 certain para will be exempted. AS28, AS29 certain para will be exempted. Correct? Yes, sir. AS25 once again will be required only when they are preparing interim financial reporting. However, AS25 is not in your syllabus. Similarly, AS15 was also not in your syllabus, so you will not be able to understand what are the relaxation exemption. However, in exam for this a question may ask, so you need to be very much, you need to understand the AS3 and AS17 is not fully applicable to SMC. Similarly, there are some accounting standards which are exempted, in some para are exempted or some relaxation has been given, that is AS15, AS19, AS20, AS28 and AS29, correct? And AS25 will be applicable only when they are preparing interim financial report, and AS21, 23, 27 will be applicable when they are required to prepare consolidated financial statement as per the respective regulation. Understood? Yes, sir. This was the point which was amendment for the applicability of accounting standard. I don't know whether it is important or not important from examination point of view, but amendment is amendment, require a discussion. Correct? Correct. Coming to second amendment, which is important from examination point of view, is related to the format, means Schedule 3 Division 1 of Companies Act. Correct now. Schedule 3 Division 1 of Companies Act. See, there is Schedule 3. So there are some amendments which are very important from examination point of view, but there are a lot of amendments, but all amendments are not related to CA Inter exam. So I will only discuss about those important amendments which I think is important from CA Inter examination point of view. There are many other amendments also which are not actually cannot be asked in CA Inter exam, so that I am not discussing right now because I don't want to trouble you much. Now, first amendment which is related to Schedule 3 Division 1 of Companies Act 2013 is that how to round off. Previously, rounding off was based on turnover, based on turnover. Now rounding off is based on total income. You can see they have changed turnover to total income. You can see total income of the company. Depending upon, previously it was turnover, now it is depending upon total income of the company. Total income means revenue plus other income. The figures appearing in the financial statement shall be, now it is shall be rounded off. Means now it become mandatory. Initially, previously it was may be rounded off. Now they have given shall be rounded off. So rounding off now become compulsory. And for rounding off, we need to just find out what is the total income of the company. What they said, if the total income is less than 100 crore rupees, total income is less than 100 crore rupees, so rounding off to the nearest 100 or nearest 1000 or nearest lakh or the nearest million or decimal thereof. Correct? Means whenever total income is less than 100 crore, then rounding off can be done to the nearest 100, nearest 1000, nearest lakh, nearest million or decimal thereof. Correct? However, when total income is 100 crore rupees or more, then rounding off to the nearest lakhs means you cannot do rounding off to the nearest 100. Then rounding off to the nearest lakhs, millions or crore or decimal thereof. Lakhs, millions or crore or decimal thereof. Understood? Yes, sir. Once a unit of measurement is used, it should be used uniformly in the financial statement. Means whatever you have used in the current financial statement should be uniformly used in all succeeding financial statement. Yes, sir. This also I think very simple. Then coming to the format of balance sheet, there is one important changes in the format. Key, you can see we write down asset. After asset, we write down non-current asset. Then we used to write down A, property, plant and equipment. But now we write down point number A, property, plant and equipment and intangible asset. Means property, plant and equipment and intangible asset, because it also includes intangible asset. I used to say in the class it is actually not correct. So now they have said it will be point number A, property, plant and equipment and intangible asset. And under this point number 1 there was tangible asset. But now point number 1 will be property, plant and equipment, because AS10 is AS10 is applicable to property, plant and equipment. Correct now. So this is the amendment. The point number 1 non-current asset, in that point number A PP and intangible asset, in that point number 1 will be property, plant and equipment, and point number 2, 3, 4 remains same. You can see intangible asset capital WIP and intangible asset under development. So this is one changes in the on the face of balance sheet. Correct. Then coming to the notes to account, one notes to account for the share capital. For share capital, one part has been added. Now a company is required to disclose shareholding of promoter. Shareholding of promoter. I hope you know promoter, who are promoter you have done in Companies Act. Correct now. If you don't know, refer your Companies Act. Correct now. So a company shall disclose shareholding of promoter. Shareholdings of promoter. This is also one amendment. But from my point of view, I don't think so. This they will ask this type of question. But they can ask. Therefore, I am just discussing it. So shareholding pattern of promoter. So shares held by promoter at the end of the year, percentage change during the year. Shares held by the promoter at the end of the year means serial number, promoter name, number of shares, percentage of total shares. Don't worry, if they ask this type of information, they will give the details. These are the promoters, these are the promoter name, these are the number of shares held by them, and percentage you can calculate. Yes, the percentage of change during the year need to be also disclosed. Correct. This is one amendment related to share capital. Then coming next to next point is what? This is very important amendment is short-term borrowing. Short-term borrowing initially means previously we used to disclose current maturities of long-term borrowing under other current liability. Means we used to disclose current maturities of long-term borrowing. If you remember, we have done in hire purchase and also we have done in lease. We have done in hire purchase, uh, not it, or we have done in borrowing also. This correct now. You suppose we have 1 lakh, yeah, 10 lakh is the borrowing. Out of these 2 lakh is payable within 12 months and 8 lakh is payable after 12 months. So this become current maturities of long term borrowing. Current maturities of long term borrowing. So any current maturities of long term borrowing will be now shown under short term borrowing. Under short term borrowing. Understood? So current maturities of long term borrowing will be shown under short term borrowing. Previously we used to disclose current maturities of long term borrowing under other current liability, but now it will be changed from other current liability to what? Short term borrowing. This is important from examination. We will pakka ask this point in exam. Correct? Yes, sir. Correct. Then second amendment means next amendment is trade payable due for payment. So now we all know that trade payable need to be shown how much due to MSME, how much due to other. MSME means what? Micro, small and medium enterprise. Previously we used to write down due to SME, but now we'll say due to MSME, due to other. Correct now. So trade payable, now we need to give some schedule. So what is this schedule? This is, I don't think so they will ask the schedule in exam, but you should know what is the changes under trade payable. We need to write down the following aging schedule for trade payable due for payment. You write down particulars, how much due, how much due to MSME, how much due to others, how much due to disputed dues to MSME and disputed dues to others. Means these are undisputed. Correct now. Outstanding for the following period from the due date of payment. Outstanding for the following period from the due date of payment, less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. Means you can see it has been divided in 4 parts: less than 1 year, 1 to 2 year, 2 to 3 year, and for more than 3 year. And then we write down how much is the amount and then total. Understood? So this aging schedule is required for trade payable. Correct? Understood? You can see now under other current liability, current maturities for long-term borrowing will not be shown. But one doubt will come, sir, what about current maturities of finance lease obligation? Means finance lease, if there is some finance lease, so of course for that also there is some current maturities. For that there is no amendment, so that will be still be shown under other current liability, current maturities of finance lease obligation. Understood? Correct? Yes, sir. From my point of view, this should be also shown under short-term borrowing, but there is no amendment for this point. Current maturities of finance lease obligation, so that will be continue to be shown under other current liabilities. Yes, sir. Correct? Yes, sir. Then coming to the next point, I am only discussing those para which is important for CA enter examination. So please, if you have read somewhere there are some para which I think it is not at all important from CA enter examination, that I am not discussing. I unnecessary, there is no need to trouble you. Correct? Yes, sir. There are many other amendment also. If you want to read, you can read. I can provide you the entire PDF, but that is not important from examination point of view. Correct? Yes, sir. Then coming to other non-current asset, previously security deposit we used to show under loans and advance. Security deposit we used to show under other loans and advance, but now it will be shown under other non-current asset. This is also important. Security deposit, if any, will be shown under other non-current asset. Previously we used to show under long-term loans and advance, but now it will be shown under other non-current asset. Other non-current asset, and this is also important. It is also important from examination point of view. Then as per trade receivable is concerned, for trade receivable also some aging schedule has been given. So for trade payable, similar aging schedule has been given. For trade receivable also, you can see trade receivable aging schedule outstanding for the period from due date of payment less than 6 months, 6 months, 6 month, 1 year, 1 to 2 year. Their trade payable, it was what? uh, for trade paper, this means it depends upon it is non-current or current. If it is non-current, so we can start from what, 1 to 2 year directly, correct now. But if it is current, then we start with less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. Outstanding for period from due date of payment, from the due date of payment. We see this is the due date of payment. This is the due date of payment, correct now. Due date of payment, and is outstanding for following period from the due date of payment, from the due date of payment. Understood? Yes, sir. So less than 6 months, 6 month, 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. This all information will be given in the question, correct now. Don't worry. Correct. Initially we used to show trade receivable as secured, considered good, unsecured, considered good, and doubtful. But now you can see in particular undisputed trade receivable consider good, undisputed trade receivable consider doubtful, disputed trade receivable consider good, disputed trade receivable consider doubtful. Understood? So undisputed trade receivable in two part, consider good, consider doubtful. Disputed trade receivable two part, consider good, consider doubtful. Then aging schedule will be what, less than 6 months, 6 months, 1 year, 1 to 2 year, 2 year to 3 year, and more than 3 year. Understood? Correct. I don't know whether it is important or not important. If asked, you should know how to prepare this aging schedule. But because it is amendment, so for the first exam is the this attempt, it may be important from examination point of view. Similar trade receivable which are current, same aging schedule is given. You can read by your own. Correct. This much I hope you have understood. Correct. Then there are some ratio which are now supposed to be disclosed in financial statement. One ratio, earning per share, will be disclosed on the face of SOPL. Earning per share, basic and diluted earning per share, will be disclosed on the face of SOPL. Now there are some ratio which are to be disclosed as a notes to account. So current ratio, current ratio, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, return on investment. Correct now. This need to be disclosed. Correct now. All these ratio need to be given. So don't worry, they will give you ratio only to disclose it. If you have done FM, so you know all these ratio, you can calculate it. Correct now. Yes, sir. But I don't think in accounting exam they will ask the calculation of this ratio. Correct now. The company shall explain the item included in numerator and denominator for computing the above ratio. Further explanations shall be provided for any changes in the ratio by more than 25% as compared to preceding year. Means any changes for more than 25% need from the previous accounting year require a separate disclosure. Understood? Balance sheet understood? Correct. Now coming to SOPL, one of the important changes on the face of SOPL, that previously we used to write on revenue from operation other income. I used to say in the class will be total income, but now they have changed this. It was written total revenue, but now it has been amended to total income. Of course, it was total income. It is not total revenue. So total income should come. However, in our class we used to write on total income only. Correct now. You can see the format we have written total income only. This was on the face of SOPL. One more amendment. Revenue from operation will now also include grant or donation received relevant in case of Section 8 companies. Means for Section 8 companies, grant or donation will be revenue. For Section 8 companies means can is a non-profit organization, for that they normally receive grant. So for them grant or donation, whatever they receive, that is revenue only. So grant or donation received relevant in case of Section 8 companies will be revenue from operation. This is also one important changes. Correct now. These are the small changes which are required from examination point of view. Correct? Understood? I hope you have understood this for format. As per company financial statement chapter is relevant, one more changes is there. Now we have done in class CDT and dividend distribution tax, corporate dividend tax, dividend distribution tax on dividend paid. So now the concept of CDT and DDT has been withdrawn from income tax act. So wherever you have done CDT and DDT, now you just skip that point. Means that point you can ignore. Means if in the question CDT rate is given, just ignore it. Means ignore CDT rate and you are not supposed to calculate CDT. However, can you see we have done in class that if CDT rate is given, if CDT rate is not given, assume nil. So in exam question that rate will not be given, that automatically become nil. Understood now? So that is, I will say, not important. Means already it is understood point. If the rate of CDT is not given, will ignore it. Understood? Yes, sir. This was total amendment as per accounting paper is concerned. Accounting paper is concerned. I hope you have understood. Now, let us discuss some more point. If you come to paper 1 accounting marks trend analysis, you can see I have just prepared marks trend analysis, and soon I will give you the expected question of accounting and advanced accounting. Soon it will be released soon, don't worry. It is under preparation. So on a huge demand, it is demanded by many students. So I am just giving you the expected list of question. Normally I used to give for CA final paper. Now for the first time I will also release for CA inter also, for group 1 and group 2 both. So you can see this is the marks analysis. You can see this accounting standard is very important. You can see accounting standard, every attempt 20, minimum 20 marks question have been asked, and some attempt 20, 30, 25 marks also have been asked. Correct? Financial statement of company, normally they ask 10 marks question. Miss sometimes they have asked a balance sheet of 20 marks question also, but normally we can say 5 to 10 marks question will come from this. Cash flow statement, normally 10 to 12 marks question will come from this. You can see profit and loss prior to incorporation. You can see normally 5 to 10 marks question will come from this category. Redemption of preference share and bonus share together. Redemption of preference share and bonus share together. You can see redemption of preference share and bonus share together. It may come from 15 marks, sometime 15 marks, 12 marks, 15 marks, or 15 marks coverage will be from these two chapters. Correct now. Redemption debenture, normally it will be 5 to 10 marks, 5 to 10 marks, 8 marks question will come redemption debenture. Investment account is very important. 10 to 15 marks question may come from investment account. Insurance claim, 10 marks will come. 10 marks question will come from insurance claim. Higher purchase, you can see 8 marks, 5 to 8 marks question will come from higher purchase. Department accounting, if you can see department account also 10 marks question. Normally they ask 10 mark question. Branch account, you can see 10 marks question. They normally ask 10 marks question. So you can see branch and department together 20 marks coverage will be there. Correct. Accounting for incomplete records, normally it will be 10 marks or 50 marks question will from incomplete records and nothing. Correct. The portion deleted means previously there was partnership in accounting, it has been deleted now. So of course you can see this is the weightage of marks. But can you just see that from every chapter one question have been asked in every attempt, means you can't leave any chapter. All chapters are important from examination point of view. Basically accounting standard, it is what mandatory question number 1 of 20-25 marks. That is very important. You can increase your marks by writing that question what in a very good, means if you write accounting standard question mm, in an effective way, so you can easily score 20 out of 25 marks in accounting standard, and that will increase your marks in entire group. Yes sir. Coming to if you see group 2, group 2, so group 2 you can see chapters are less. You can see accounting standard 30 marks coverage will be accounting standard. 30 marks coverage will be accounting standard. Employee stock option, normally 5 marks question will come. Buyback of securities, you can see 10 marks, sometime 10 marks, sometime 15 marks, sometime 20 marks question is also from buyback. Amalgamation and internal reconstruction, you can see sometime amalgamation, sometime internal reconstruction. 15 marks to 20 marks coverage will be from amalgamation and internal reconstruction. Liquidation of company, it will be 10 to 15 marks. Sometimes 5 marks question have been also asked from liquidation. Banking company 10 marks question. Non-banking financial company, you can see it is 10 to 5 to 10 marks question will come. Consolidation 20 marks question compulsory it will come. Advanced partnership 20 marks question compulsory will come. This is what group 2 advanced accounting. In group 2 there is no major changes, correct now. Means of course the schedule 3 changes will be also applicable to group 2. Why? Because can I see here also you are preparing the balance sheet. Here also you are preparing the balance sheet, but of course here they will not ask the preparation of schedule 3 as per the disclosure requirement of preparation of balance sheet or SOP as per the disclosure requirement of schedule 3. However, format you can under the format on the page whatever changes there, that is relevant for group 2 advanced accounting also. Understood? This was for amendment. I hope you have understood, correct now, and this will be beneficial for you, correct. Soon I will be releasing soon expected question for accounting and advanced accounting. Till then, bye bye, take care, enjoy your preparation, enjoy your studies, and become Miss Pass CA Inter as soon as possible. Come to CA Final as soon as possible. Bye bye, all the best. Enjoy your exam, enjoy your preparation time. Bye bye.